Welcome back to the CryptoBot channel, everyone. My name is Josh, and right now, something just happened that hasn't happened in over 2 years. So in just a moment, I'll be talking more about that alongside Bitcoin and Ethereum later in the video, so definitely stick around. First of all, just giving you a quick update on what the US stock market did today. This right here is the Nasdaq 100 index on the daily time frame. And with the bullish price action played out during the trading day, this has now invalidated the chance of forming a potential bearish divergence here on the daily time frame between the price action and the RSI, that is. Because if you watched my last video on the channel, I was talking about how it's possible a bearish divergence could be forming, because at that time yesterday, the daily RSI for the Nasdaq 100 index was not yet in higher highs. But with today's daily candle close, after seeing that bullish price action, that has pushed the daily RSI into a slightly higher high. So obviously we now no longer have any sort of bearish divergence here. And so obviously the Nasdaq 100 index is still currently in that intermediary bullish phase in the market, somewhat similar to what we saw in the first quarter of this year. Especially in March, we saw a lot of bullish price action, even though the larger trend in the market was still bearish. But obviously that's nothing new for those of you who have been watching my videos over the past few weeks, because ever since the Nasdaq 100 index was all the way down at these lower levels a few weeks ago, I've been talking about how it's extremely likely that this phase in the market that we're in right now, I was saying that back here, is extremely similar to what we saw in the first quarter of this year, which was basically an intermediary bullish phase within the larger downtrend. And that was pretty much all based on the Fed meetings, inflation, and interest rate hikes. And if you're not up to date in what the Fed is doing, I strongly recommend you check out my video that I posted 2 days ago. So not my last video, but the video before that one, because that video could give you a stronger insight on what to expect in the coming months. And just before we get into the crypto part of this video, zooming all the way out to the monthly time frame for the Nasdaq 100 index. So each one of these candles is an entire month. And with today's daily candle close, we not only saw a daily candle close, we also saw a weekly candle close for the stock market and a monthly candle close for the stock market. Because in case there's anyone out there who's only been in crypto and not in the stock market does not trade on weekends, unlike crypto. And so now that the stock market has closed the month of July, we can see that the Nasdaq 100 index gained around 12.5%, more specifically 12.55% throughout the month of July from start to finish. And if you simply go back and look at all of these previous monthly candles to take a look at the last month where we saw a gain either equal to or bigger than 12.55%, that takes us all the way back to April 2020. So the month that we just had, the month of July, was the biggest percentage gain for the Nasdaq 100 index that we have seen in over 2 years, since April 2020. And obviously there is a lot different right now compared to what was happening back in April 2020. There is certainly a lot of difference, don't get me wrong, but there is 2 major similarities between right now and back in April 2020, which is the fact that obviously this green month occurred after a lot of bearish price action, and that green month back in April 2020 occurred after a lot of bearish price action. And historically speaking, the biggest gains normally happen either during a recession, during a bear market, or just after a lot of bearish price action. And to make it clear, when I say some of the biggest gains occur during a recession, I mean daily gains and weekly gains, for example, not of course a gain over the year. And getting to the other similarity between what we're seeing at the moment and what we saw back in around April 2020 is that back in 2020, specifically March and April 2020, we saw the Federal Reserve perform a massive U-turn in the markets. And one of the major things that the Fed did back in that U-turn back in earlier 2020 was begin to drop their federal funds rate, drop interest rates. And now looking at this time around, this actually hasn't happened just yet. In fact, we still have potentially a couple more rate hikes to go for the rest of this year. But due to multiple different reasons, we're now seeing the markets potentially front run that Fed U-turn. And the reason to believe why we're potentially towards the beginning stages of a Fed U-turn is, first of all, based on the fact that the Fed at the recent Fed meeting only hiked rates by just 75 basis points instead of 100 basis points, which begins to break the trend in their increases in interest rate hikes throughout the year. Because earlier this year, the Fed began hiking rates by 25 basis points at one of their earlier Fed meetings this year. And then at the next Fed meeting, they hiked rates by 50 basis points. And then at the next Fed meeting, they hiked rates by 75 basis points. And now with the latest Fed meeting that we saw just a few days ago, the Fed hiked interest rates by another 75 basis points instead of following that trend of increasing the rate they're hiking interest rates, which according to that trend, we should have seen a 100 basis point hike. But the fact that the Fed only hiked by 75 basis points at that latest Fed meeting is an early sign that the Fed is reducing the rate that they're increasing rates. And even Jerome Powell himself actually confirmed this to be the case in the press conference immediately following the latest Fed meeting a few days ago. So once again, those are some early signs from Jerome Powell and the Fed itself that the Fed is potentially beginning to U-turn. And not only that, but the futures market is currently pricing in the official Fed U-turn, meaning that the Fed is going from rate hikes to rate cuts towards the end of this year, entering into early 2023. And for those of you who don't know the last time where the Fed went from a rate hike cycle to a rate cut cycle, the last time that happened marked the end for the 2018 bear market for both the stock market and for crypto. So in case you haven't already figured it out, the Fed plays an extremely important role in the larger market, in these macro moves in the market. And once again, if you want more of an explanation and more information on what the Fed is doing, then check out that other video that I posted just 2 days ago. That is an important one to watch if you missed it. But anyway, getting into the Bitcoin part of this video, just giving you a quick update on the daily Bitcoin charts. And right now, the daily Bitcoin RSI is still currently in an uptrend at the time of recording this video, but just keep an eye on where this most recent high actually forms, because as of right now, at the time of recording this video, the most recent high that we're seeing at the moment is currently sitting at around a horizontal level to the previous high. So this hasn't yet made a new higher high in the daily RSI. But because this hasn't yet been confirmed as a local high for both Bitcoin and the RSI, obviously there's still the possibility that the RSI could keep heading to the upside here to actually form another higher high. And also just something else to think about is if we keep forming these higher highs, obviously eventually we'll make our way towards overbought territories on the daily Bitcoin RSI. And the last time that happened was right back here at the end of March, entering into early April, and we can see what happened at that stage in the market. But technically speaking, the current trend on the daily time frame, speaking about this intermediary trend within the larger downtrend, this smaller trend is still obviously more bullish than bearish as of recording this video. And if you're zooming into the 12-hour Bitcoin chart, what we could see at the moment is if you're looking at the 12-hour candle closes, as of recording this video, we're currently forming higher highs in the Bitcoin price, but looking at the 12-hour Bitcoin RSI, this is currently sitting in lower highs, which is a potential bearish divergence forming. But technically speaking, especially if the latest 12-hour candle closes as this green candle just here, then the local high in terms of the candle closes hasn't yet been confirmed, which means it's still technically possible for the Bitcoin price to continue a little bit higher, which would raise the Bitcoin RSI into potentially a slightly higher high, which would invalidate a potential bearish divergence. So right now, this isn't fully active on the charts, but it is still something to be aware of in case we do confirm a local high just here. Obviously, this would mean that we're losing bullish momentum. And speaking about potentially losing some short-term bullish momentum, if you're zooming into the 4-hour time frame, looking at the 4-hour Bitcoin MACD, specifically the histogram within the MACD, as of recording this video, this is currently declining, which does actually show us that there's a recent lack in bullish momentum in the immediate short term, talking about just the 4-hour chart, which is usually talking about hours and days. Whereas a signal on this 12-hour chart, for example, usually plays out at least over a few days, usually over a couple weeks or so. But going back to the 4-hour chart, once again, this is looking at the much shorter term. And like I said yesterday, we are due for a bit of a short-term call-off because the RSI on the 4-hour chart was beginning to enter into overbought territories, telling us that we have limited room to the upside in the immediate short term. And obviously, since yesterday, that has proven to be true with a lot more choppy sideways price action over the past 1 day. And by the way, a short-term call-off is just something to actually reset the RSI, which means either a short-term pullback for the price of Bitcoin or choppy sideways price action. Because if we see sideways price action in the Bitcoin price, that can actually pull back the RSI back down towards the 50 level, the neutral level. So all I'm saying is, technically speaking, based on the 4-hour Bitcoin RSI, we could be due for that sometime soon, like what we have been seeing over the past 1 day, a bit of a cool off from that bullish price action. And now heading over to the daily Ethereum chart, and we have now seen a daily candle close above 1,700, which is a great sign to see. And at the time of recording this video, the price is still holding above 1,700. And so if this continues to be the case, especially if the price consolidates above 1,700, while the daily RSI potentially plays out a bit more of a cool off in some sort of consolidation, then that there would be the most bullish scenario possible, because in a potential scenario like that, that would create a more sustainable uptrend moving forward. But if the price of Ethereum just continues pretty much straight to the upside, then obviously pretty quickly the daily Ethereum RSI would shoot into overbought territories, considering it is currently very close. And once again, the last time that happened was back at the end of March, entering into early April, which was not good for the price of Ethereum. The time before that as well, by the way, was at the all-time high for Ethereum back here in November. And obviously, looking at what came next in hindsight, that was not a good signal for Ethereum. But technically speaking, right now at the time of recording this video, the Ethereum price and the daily Ethereum RSI is still currently more bullish than bearish, technically speaking. And for me to personally flip more bearish for Ethereum on this daily chart, I would like to see a confirmed break back below 1,700 and preferably confirm 1,700 as new resistance again. If that happens, obviously that would be a bearish signal for Ethereum, but we're yet to actually see that signal. So right now we're simply more bullish than bearish. But as always, during a pump like this, there's got to be a lot of people out there feeling some FOMO, just like how when the Ethereum price crashes, there's a lot of people out there who panic. And like I said in my last video on the channel, if you get in the habit of making financial decisions based on only emotions, so for example, if you panic sell after a massive crash or panic buy after a massive pump, usually you're going to lose money over the long run. But of course, that is not personal financial advice for you. That's just generally speaking what happens. And if you zoom into the 12-hour Ethereum chart, technically speaking, we still have that potential bearish divergence forming while we're seeing higher highs in the price action, but lower highs in the RSI. But once again, as of right now, we haven't fully confirmed this local high, at least just yet. So technically speaking, especially if this 12-hour candle closes as a green 12-hour candle, then this bearish divergence hasn't fully been confirmed as of recording this video. It is just in its formation phase. And of course, it is still something important to at least be aware of. And something else that's important to be aware of is on the 4-hour Ethereum chart. Right now, the RSI is getting close again to overbought territories, while the MACD, looking specifically at the histogram within the 4-hour Ethereum MACD, this is currently in a short-term decline, which tells us we have limited bullish momentum. In fact, reducing bullish momentum in the somewhat shorter term, just on the 4-hour time frame. Now, once again, technically speaking, the short-term trend is still technically more bullish than bearish. It hasn't actually confirmed a bearish flip just yet. But with that being said, according to these price oscillators, we do have somewhat limited room to the upside in the immediate short term, and we could be due for a little bit more of a short-term cool-off of some sort, whether that's a further pullback in the price or more of a sideways consolidation. That remains to be seen. And if you're finding this video useful, please make sure to leave a like down below and subscribe to the channel if you are new, and also check out one of these uploads popping up right here on your screen, because the video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money when the price is chopping around sideways. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.